If you're using a self-directed IRA to buy and hold real estate, you've probably heard, hopefully, about the new FinCEN reporting rules. What most people aren't telling you, though, is how this March 1st deadline specifically targets the way your self-directed IRA holds title to your real estate. So starting right now, every non-finance property transfer into an entity has to be reported to the feds, including the names of every beneficial owner behind the IRA. So what I'm going to do today is I'm going to break down for you how this new residential reporting rule works with respect to your IRA. And if your IRA is owning real estate, I'm going to show you a workaround so you can gain protection for those properties and you do not have to report your information to the feds. All right, let's get started. Okay, so here is the deal. Let's assume that I have this self-directed IRA right here. And we will say that the owner of this person down here is John. So John has his self-directed IRA, and inside of his self-directed IRA, he's purchased a few pieces of property. Now, John has listened to some videos and he understands that there's a lot of exposure there by owning real estate directly in your self-directed IRA. Because if something goes wrong with one of those properties, then the injured party over here, their attorney, of course, what are they going to do? They're going to sue the IRA. And anything held inside of that IRA, including your cash that you haven't invested, or maybe it's invested in a brokerage account, wherever that is, all of those assets are now at risk. So John's been analyzing this and he's come to the conclusion that, hey, I need to gain protection for my properties held in my IRA so I do not subject my self-directed IRA to that type of lawsuit and that type of risk. So John may do what people were doing back in 2025, and that is set up some limited liability companies here. By setting up these LLCs, what John would do typically is deed these properties out of the IRA and into the LLC that is going to be owned by the IRA. And so effectively what he's done now is he's removed the risk and the liabilities from the IRA and placed them in the LLC. Now, I have a video on how to properly structure real estate held inside of an IRA for maximum asset protection. Be sure to be on the lookout for that. I'll be releasing that video here in the next 2 weeks, and it'll show you exactly what you should be doing if you're in this situation right now. Okay, so back to this. Now, when John does this, under the new FinCEN reporting requirements, what's going to happen is that when he deeds that property from his name into the LLC, that's going to trigger the reporting requirement because the property is leaving this entity here, the self-directed IRA, and it's going to a business entity. So this triggers a report because FinCEN is concerned about money laundering. So any deeding of real estate, okay, this type of transfer where the property is deeded directly, be it from an individual to an entity or an entity to an entity, has to get reported on. Now, here's what's going to get reported on, and this is why this should be a concern for you if you're in this situation. I don't want to say if you're a John. You know what that means. So anyhow, if you're in this situation, here's what's going to happen. You'll have to report on the IRA owner. So they'll report on your IRA was the one making the transfer and on the beneficial owner of that IRA, and if any consideration was paid. So boom, you're going to get tagged here. Then you're also going to get tagged up here on your LLC. Now in the LLC, you don't own the LLC, but they look through the LLC to determine who is the actual person behind that. So by deeding it into the LLC, you're going to get your LLC will be reported to FinCEN, your IRA will be reported to FinCEN, and you will be reported to FinCEN. So now why should this be a concern for you, all this reporting? Well, with the new systems that the IRS and the federal government has put in place with the use of AI now the systems are starting to talk to one another. And one of the areas that the IRS has stated that they have focused on in the past, and I assume that they're going to continue to do this, are transactions inside of IRAs. Because the concern is that there is a prohibited transaction somewhere which would then disqualify that IRA. In fact, next week, be sure to catch my video on what disqualifies IRAs and what you need to be looking out for if you own real estate inside of your IRA. And I'm going to break it all down for you in that video so you'll know what the IRS is exactly looking for and what you can do to prevent your IRA from collapsing on an audit. Now, what I would like to do for you is then show you how to avoid all of this. Why give the feds all of this information? Because you don't have to. Because in the FinCEN regulations, they actually left us a carve-out, one strategy that we can implement that avoids this type of reporting. Now, that strategy requires the use of a special tool. So this is what it looks like again. So here is my self-directed IRA, much bigger this time. So I have my self-directed IRA here, and let's put John back in here with his self-directed IRA and his 2 properties. Now, in this context, what John's going to want to do is he's not going to transfer the property directly to the LLC. No, instead what John will do is he'll first set up 2 land trusts like this. Okay, he's going to establish 2 land trusts, or let me rephrase that. The IRA will establish the trust. So the IRA is going to create the trust, and the IRA will be the beneficiary of this trust, of both of these. So these are land trusts. All right, now, what John will need to do is he will then deed the property into the various trusts. So he'll transfer both pieces of real estate into their separate trusts. Now, this transfer right here into the trust, it is an exempt transfer. So there's no reporting on this transfer right here because FinCEN has carved that out. So you don't have to report on that. Okay, great. So now what John has is he has 2 properties held inside of these trusts. Okay, the problem though is that a land trust doesn't offer asset protection, except in Florida. Now, what do I mean by that? If you're not familiar with land trusts, then here's the way they work. They're a title holding vehicle. They're a grantor trust. So if somebody were to be injured on a property, okay, on this one right here, so say this person is injured and they were to sue the trust, that is the owner of the property, then that lawsuit is not only naming the trust as a defendant, it's also going to work its way down to the IRA. The IRA is going to be drug into this lawsuit. Not only will the IRA be drug into the lawsuit, then any assets of that IRA are now at risk. And the assets of the IRA is any cash that remains in the IRA, investments, and that beneficial interest of that other land trust. Okay, so then they can take that. So essentially, if you just stop at the land trust level right here, then you've put all of these assets at risk. So what you want to do is use a limited liability company. Now I'm going to show you how to structure this in that video. I will be releasing on the strategies for asset protection for your self-directed IRA. This video is strictly about how to avoid the reporting requirement. So know this, if you want to avoid this, the first step for you is if you're protecting your property is to set up land trusts for those initial transfers to avoid any reporting that comes from that. So the March 1st deadline, as you can see, is a game changer for how we transfer real estate out of our self-directed IRA for asset protection purposes. Now, I want to make sure that you don't accidentally blow your privacy by compromising the transfer. So what I've done is I've put together a report for you. Now, all you need to do is this. Comment report below and I'll send you my 2026 FinCEN self-directed IRA compliance map so you know exactly what you need to do when you're transferring real estate from your self-directed IRA into an entity and avoiding the reporting requirements. Guys, I hope you liked this video. Be sure to hit the like button. And be sure to catch the other videos in this series, which will be breaking down for you the important aspects of holding title to your real estate in your IRA for maximum asset protection. I'm also going to be talking about the issues that can come up when using a self-directed IRA and how to navigate around those so your IRA does not get punched by the IRS. And lastly, I'm going to show you an alternative strategy that could blow the self-directed IRA strategy out of the water altogether. I got 3 great videos after this. Be sure to subscribe so you'll get notified when those videos are released. Take care.